Hey guys, this is Andrew for trendsenses.com. So very quickly, for those who are watching my video for the first time, let me quickly introduce myself. I've been working as a professional trader for the past 6 years in Hong Kong, and I've just decided to make some YouTube videos because guys, I want to pass the knowledge. I want to show you all the different tools and techniques that I like to use at work to make money on the markets. And in my videos, I want to show you how to do it yourself. So today I want to make a big update guys on AMC and have a look on the longer term. Let's get into it. So usually I start on the 4 hours time frame. In this video, I want to start on the daily time frame, and we are taking a step back, guys. And I want to show you what to me is actually playing out. So I'm talking about the 35 level for a long time. We are not there yet, but we are going there. And once we're going to reach this, let's see if what might happen. So once again, we're not there yet. Let me quickly sum up the situation of what happened this year. So we had this strong move up, guys, from the 2 area to 25 roughly, developing in 5 waves. All right, as usual, moves up, developing 5 waves, guys. Then we had this correction, ABC, 3 waves, and then there was kind of a question: are we gonna correct more, or are we going to start a new bull cycle? And when I saw that here we had those 5 waves, very clean, 1, 2, 3, 4, 5, and I'm not going to zoom in, but if I do, each impulse here, the third, the fifth, and even the first can be broken down in 5 waves too, which is actually telling us that we are bullish. All right, so this is a very good information you can use from Elliott wave theory, is that if you see a move developing in 5 waves, it's a motive wave. It means that the market is going to keep developing probably in this direction. So from there, I know that we are bullish, and I know that I'm expecting here this correction that happened. And here I was trying, to time the rebound, which was not easy. We had, some kind of tricks done by the market, and it was not that clean for me. But anyways, we still had our signals that were quite clear when they happened. For example, one of those signals I used, guys, to know that we are gonna start having stronger moves is this one. The same I'm using on GameStop, guys. All right, on GameStop we just broke it. I didn't do the video yet. I'm gonna do it very soon, but we just broke this level. All right, and here when we break this, inside the first wave, then we have the second wave the corrective second wave, and then we know that we're having the third wave that is going to be the most impulsive one, the strongest one with strong associated volumes. So here we have our ABC. Then we are having again, after a 1, 2, 3, 4, 5 ABC, we're going to start again a 1, 2, 3, 4, 5, which is actually the third wave of this move that is happening here. So here I'm going to give you my different scenarios. Right now we are in the third wave of this third wave, so the blue one here. And this is why when I did my video last weekend, guys, I told you that 12 would probably hold, that this deep, because we had some consolidation here, was nothing, and that we're expecting some very strong moves to come this week, which we had. So now I might have 1 or 2 days delay on this video, but it doesn't matter. I'm not sure if we broke 17 or not. I'm not sure if we got a bit rejected to the 15 level or not. It's not important, guys. What is important is that this wave is still developing, and we are only in the third wave of this purple third wave. So the question is, where is it heading? And for now, it's too early to answer this question. We first need to know where the third wave is going to go, and then how the fifth wave is developing. But for sure, we can expect something like this. So let's say we correct to 15, which is kind of my preferred scenario. Then we're going to have a 1, 2, 3, 4, 5, maybe like this. So this is one of my scenarios. And either we go to 35, then it means that we're going to correct maybe to 25 or even 17, and then do a fifth wave that is going to blow up everything, because 35, guys, I remind you, is our all-time high. If I check on the weekly time frame, you see, guys, 35 is not a random level, is the all-time high. And this is why I think we are first getting there and probably gonna break it if we arrive there with enough strength. So let me come back here. So let's see what we're having, guys. The third wave might even break the 35 level itself. You know, this is possible as well, but most likely it will be the maximum of this third wave. And then let's see how deep we correct, but we know that we're going to have one move up. That's why we need some time. I have told you guys that the 35 level would be reached this summer. I told you guys this, you know, a long time ago. Some of you, you know, were not sure. I was just saying this to make more views up because I really believed. And I mean, it's my analysis that is telling me what to tell you guys. And for now, what I can tell you for sure is that this third wave is going to last, I think, until the end of June. And this is when we're going to have more information if yes or no, we're going to break 35 quickly or not. So I want to now show you some very cool option strategies that you can make, guys, to actually benefit from this whole move up that is happening right now. So I wanted to show you guys this strategy. So basically, very quickly, let me remind you what is a call option. Is an option that is going to pay you the performance above a given level that we call the strike. So the formula is the maximum between 0 and spot, which is your spot level, minus K, which is the strike. And by using call options, you can actually make some nice option strategies. So here, the one I want to show you guys is what we call a butterfly. So a butterfly is a payoff that has this kind of shape where you have some wings. That's why we call it a butterfly, and a body. And to build this strategy, so for example, you can do it like this. So you can buy the 20 level. If I take the June maturity and I take a butterfly that is 20, 30, 40, so we're going to check the prices very soon. So basically you buy, for example, 50 call option of the 20 strike call, then you sell 100 options of the 30 strike call, which is here. So, all right. So if you just buy the call option, you're like this, then you sell here 100. So you're going to take the opposite direction on the downside, and then you want to cap your loss. You don't want to lose above 40. So you buy here 50 as well. And then you're like this, you're having a butterfly. So now let's take the prices of those options so that we know the price of this strategy. So I'm going to show you guys exactly how you can do it yourself. You just go on Yahoo Finance. All right. You type AMC, you go on the option chain, which is here, guys. You take the June maturity, which is very liquid, where you're going to have tight bid-ask spreads, and you check the prices. So we are now on the June maturity. So let's check the prices. So the 40 strike is at 66. So let's say we buy at 67. Let's say we cross the bid-ask spread. So 67, 30, we're going to sell it at 91. And the 20 is at 190. So the 20 is at 190. This one we're going to sell it 91, we said, and we buy this one at 67. And here I just compute my premium, and bam. All right, so this would cost you guys, so maybe it's a bit too much. Let's take $3,000, but you can make up to 40,000. So let's say you do, 10 times less up. Now it costs only $400, so it's the same strategies, and you can make up to 5,500. Now the strategy I would make myself, I would go to the 25, I would here sell 7.5. Okay, so it's roughly the same. Basically, the number of options you're having here must be 0, otherwise you're gonna have a problem. And the 25 is probably cheaper, so the 25 costs 133. So once again, I consider I cross the bid-ask spread, so it's going to be actually cheaper than this, guys, because if you just put your order in between the bid and the ask, you're going to see that you have a lot of iceberg orders, which means some hidden orders between those levels that you can be executed on. So 1.27. All right, so now for $120, so this is, much more reasonable, you can make up to $2,500. All right, so I just wanted to show you guys, the kind of strategies you can make, how you can check the premium, the total premium you're going to pay, and the kind of payoff that you might have. And I think that this is very interesting to do on a stock like AMC, because you are selling actually the upside call options. You see here, you're not only buying, you're buying the 25, but you're selling the 30, because the volatility is very high on those strikes, that the premium of your total strategy is not that big. So guys, that's it for me. I hope you enjoyed this video. And if you did, please don't forget to click on the sub, like, and bell button, so you're gonna be the first to know when I upload anything new. And stay close to shore. I'll see you guys.